Right now I'm reading out of the branch closure policies on paper page 643 out of the reference guide to regulatory compliance. The FDIC Improvement Act of 1991 included a provision that banks provide their communities with advance notice before closing branches. The driving force behind this law was Congress's concern that banks were closing branches primarily in inner city neighborhoods. Neighborhoods would then be left without sufficient financial services because of the lack of adequate banking facilities within the area can slow the development of a community. Congress believed that communities needed notice if a branch was closing. The law requires that communities be notified in advance so that arrangements can be made to find new banking services. This law is not implemented through regulation, but through a joint policy statement through the Federal Reserve Board, the Office of the Comptroller of the Currency, the Federal Deposit Insurance Corp, and the OTS in 1993. The policy statement defines a branch and delineates the instances when advance notice for closings is required. The law was amended in 1996 to add some of the items in the policy guidelines, and the joint policy statement was amended effective June 29th of 1999. Within the coverage section, Section 1, branches to be closed by an insured depository institution included only brick and mortar or other similar banking facilities apart from main offices where deposits are received, checks paid, or money lent. Branches closed through acquisitions or mergers are also included. Coverage does not include ATMs, remote service facilities, or loan production offices. Temporary branches, such as those opened at college registrations or state fairs, does not include branch relocations defined as movement within the same immediate neighborhood, generally 1,000 feet or less. Fourth, instances when a branch ceases operation but is not closed, such as a temporary interruption of service beyond the institution's control, if the institution plans to restore services at the location in a timely fashion. Fifth, excluded is the transfer back to the FDIC of a branch of a failed institution operated on an interim basis, provided the transfer occurs within the option period or within the occupancy period not exceeding 180 days. 6, branches closed in connection with emergency acquisitions under the Federal Deposit Insurance Act or involve any instance by the FDIC. And lastly, branches of foreign banks. Consolidations are not considered closings if all branches consolidated are in the same neighborhood and the nature of the businesses and customers served is the same. D, changes in services at branch are not considered closings provided the facility still constitutes a branch. Subpart 2. Notices of branch closing. Notice to regulator. The timing must be given to the federal regulator no later than 90 days before the date of the proposed branch closing. The contents of the notice to the regulator are sensitive information may be submitted first to the agency with a request for confidential treatment. Notice must include identification of the branch to be closed, proposed date of the closing, detailed statement of a reason for the decision to close the branch, consistent with the institution's branch closing policy. And third, under notice to regulator, this section 42 notice listed above and filed at least 90 days before the closing date required by a state supervisory agency under state law. Notice to customers. Banks must provide notice to customers of a branch at least 90 days before the proposed closing. Bank must, in good faith, allocate customers to branch for notice purposes. Allocate customers to branch for notice purposes. Notice must state location of branch to be closed, proposed date of closing, and either identify where customers may obtain services following the closing or provide a telephone number for customers to call to determine alternative sites. Fifth, any notice required by state law at least 90 days before closing will satisfy the requirement. C, the posted notice must be posted in a conspicuous manner on the branch premises at least 30 days before the proposed closing, and state the closing date and identify where customers may obtain services following the closing or provide a telephone number for customers to call for alternative service sites. D, other events. If the bank delays closing of a branch, new notices do not have to be sent or posted. And 2, if closing is conditioned on the event occurring, notice may state this fact. Subsection 3, branch closures in interstate banking coverage. Banks with branches in more than one state, and 2, closures of branches in low or moderate income areas. The requirements, and this is branch closures in interstate banking, required branch closing notices must include the mailing address of the appropriate federal regulatory agency. A statement that says comments on the closing can be mailed to the agency, and a statement that the agency does not have the authority to prevent the branch closure. 2, when applicable, include the fact that the institution will become an interstate bank before the closure of a branch in a low or moderate income area, unless the closure will be concurrent with the interstate statutes. And 3rd, if a person from the area submits a non-frivolous written request to the community leaders in the area to discuss alternatives. Written request to the federal agency related to the branch closing, the agency will meet with community leaders in the area to discuss alternatives. And 4th, no agency action will affect the authority of the bank to close the branch if all legal requirements are met. Policies for branch closing. All institutions with at least one branch must adopt written policies for branch closing. Policies must include factors for determining which branch to close, which customers to notify in such event, and procedures for providing required notices. Within subpart 5 liability section, the FERA penalties are usual: $7,500 per day, $37,500 per day if violations or unsafe or unsound practices are engaged in recklessly or part of a pattern of misconduct that favors the parties involved at the loss of the bank, or penalties of $1.375 million per day against persons who knowingly commit a violation and knowingly or recklessly cause a substantial loss to the bank or a substantial benefit to the party. And administrative enforcement, subpart B, explains that compliance with bank closing policy is reviewed during the institution's CRA or compliance exam. If an institution fails to meet requirements of the policy guideline, adverse findings may result.